Good morning, restaurant owners. Welcome back to our weekly live training. My name is Tim Cernett. I'm the founder of Financial Optics, where we help independently owned restaurant operators improve profits and cash flow. Over the past 2 weeks, we've covered the big picture, the 5 moves that separate profitable restaurants from the rest, and then we went deep onto food cost controls. This week, we're tackling something that might be even the most powerful profit lever you have. It's your menu itself. Let me share my screen and get started with this week's slide deck. And I'm going to try and get through this, and hopefully my voice holds up. I'm at the tail end of some sort of viral upper respiratory thing, and don't worry, I don't think I'm contagious. So let's get started with this week's topic. Engineering your menu for profit, the tactical playbook. Here's what I see a lot with restaurant owners. You're selling a ton of food. The restaurant is busy, but when you look at your bank account, it doesn't reflect the volume you're doing. The sales are there, but the profit isn't flowing. Most of the time, the issue isn't that you're not selling enough. It's that profit isn't baked into how your menu is structured. You're selling the wrong mix of items. You don't know what each dish actually contributes to the bottom line, or the menu is built around what sounds good rather than what's financially engineered to drive profit. And here's some context heading into 2026. Full service menu prices are up nearly 5% year over year. Most restaurant owners have raised prices, but they're raising prices without understanding your contribution margins on your menu mix. And you might be raising them on the wrong items and still leaving money on the table. In the next 15 minutes, I'm going to walk you through the framework for engineering your menu that will change how you think about every dish you serve. You'll learn recipe costing, contribution margin analysis, menu mix optimization, and portion control. The 4 pillars that turn a menu from a food list into a profit-generating system. So let's set the foundation. Recipe costing. You cannot engineer a profitable menu if you don't know what each dish costs on your plate. Everything else is built on a guess, and guesses don't improve profits. So recipe costing cards. You need to track the exact cost of every ingredient per plate of item. Nothing is too small to matter. The garnish matters, the sauce matters, the oil matters. Using Excel, Google Sheets, or tools like Margin Edge or Extra Chef to maintain accurate, up-to-date records. This is tedious work up front. It's going to take a lot of work over the next few weeks if you haven't done this before, and maybe even the next couple months, to detail cost out every item on your menu. But maintaining it is straightforward. You're just updating prices as they change. Batch recipe costing. Cost recipes at the prep level in realistic batches, the way your kitchen actually makes them. A gallon of soup, 3 pounds of meat rub, or a full tray of lasagna. This mirrors the actual kitchen workflow and accounts for yield loss during the cooking process, trimmings, shrinkage, and cook-off. Weighted averages. Ingredient prices fluctuate, as we know, especially over the last 4 or 5 years, especially with proteins. Instead of reacting to every invoice, use weighted averages over a short period of time. We're going to walk through an example on this, and this prevents overreacting to short-term price spikes and gives you a more reliable food cost. So one pro tip is to batch recipe costing on everything. So let's look at barbecue sauce example. Costing at the prep level, not the ingredient level, mirrors how your kitchen work flows. Make the full batch. Prepare a standard batch, such as 200 ounces of barbecue sauce, to establish your base unit. Add up every ingredient cost that goes into that sauce. Divide the total batch cost by the portions. So if your 200 ounces is your total batch cost and you serve 1 ounce per plate, You want to know the cost per 1 ounce. Determine the repeatable cost portion. This results in your accurate, repeatable costs on every single plate of that sauce. It's a simple math, but most operators don't do it. You want to break down each single cost in the recipe, and this 1 ounce of barbecue sauce carries a cost with it onto your menu on that particular plated item. Another tip, weighted average in action, smoothing out price volatility. Ingredient costs fluctuate over the course of multiple purchases, especially on protein. In this example, August 1st, August 5th, August 10th, you're purchasing various pounds of a particular protein. It's at different prices over that time period. So you want to come up with the total cost at the total purchase over that time period, 120 pounds weighted average. And you can keep some simple spreadsheets to do this, or software apps like Margin Edge or Extra Chef will help you do this as well. So that's the foundation, knowing exactly what every dish costs to plate. Most owners would take that cost data and look at their food cost percentage. And food cost percentage does matter. We've talked about it last week, but when it comes to engineering your menu for maximum profit, there's a more powerful metric, and this is where we're headed next. Contribution margin, the real profit metric. Food cost percentage tells you about efficiency over the course of a period, like a month or a week. Contribution margin tells you about the actual dollars that are being sent to your bottom line. Both matter, but contribution margin is what drives your bank account. This is probably the single most important concept of this entire training. Most restaurant owners are obsessed with food cost percentage, and sometimes that's to blame with people like me. Accountants, we're obsessed with percentages. And I get it. It's the number you see on your financial statements, and it's what your accountant likely talks about. But food cost percentage used by itself can actually mislead you when you're making menu decisions. So the basic formula is the contribution margin equals the menu price minus recipe cost. There's a little error here, typo here. That should be an equal sign, not a minus sign. It's your actual price minus your recipe cost gives you the actual dollars that each dish sends to the bottom line. So let's go through an example here. Dish A, menu price is 20 bucks. The recipe cost is $6.60. And that includes every single thing that goes into that recipe, that plated item, including the barbecue sauce and the garnish. The contribution margin is $13.40, and that gives you a food cost of 33%. Dish B, the menu price is $12, $3.60 food cost, $8.40 contribution margin. That gives you a 30% food cost percentage. Now, the accountant in me, or when you're looking at the big picture, you might focus on this 30%. Dish B looks a little bit better on paper, but dish A actually sends $5. There's a typo there too. It should be $5 more to the bottom per plate into your pocket. And over a course of 300 plates, that's $1,500. Another typo in there. Sorry about that. I need to update this slide. So let me be clear, food cost percentages is an important metric when you're analyzing your financial statements. This tells you how efficiently you're managing ingredient costs across the board. But when you're engineering your menu, deciding what to promote, at what price, and at what to retire, contribution margin is the metric that moves your bank account. Percentage measures efficiency. Contribution margin measures dollars. Now, let's move on to section 3. Now that you understand contribution margin, here's where the real strategy comes in, because it's not about the individual item, it's about the total contribution margin per plated item on your menu. So volume times margin equals total contribution. So in the burger, 300 sold in a month. If the contribution margin for that burger is $5 a plate, the total contribution margin across the month is 1,500. A steak, they only sold 75, but the contribution margin is $12, and the total contribution margin over that period of time, it could be a week or a month, is $900. In this case, the burger wins, not because of its margin, but because of its volume. You need both pieces, per item margin and how often it sells. So let's move on to a quadrant analysis. So you take this information and you analyze your whole menu across the period, a month or a week, to see how your menu is performing based on categorizing things, your items into a quadrant. You plot every menu item by contribution margin and popularity. Every dish falls into one of these four categories. And once you see them, the strategic decisions become obvious. You have your stars, a high contribution margin and a high volume. They're your champions. You want to protect and promote those. You've got your puzzles, a high contribution margin, but low volume. They're profitable, but unorganized. They're your biggest untapped opportunity. And you have workhorses, low contribution margin, but high volume. They're crowd pleasers, but you need to refine the profitability around these items so they're driving more dollars to your bottom line. And then you have the dogs. Now, I hate referring to things as dogs. I love dogs just as much as everyone, but that's the low contribution margin and the low volume. And you either need to remove them from your menu or rework them. Let's look at this on a real life example of, and let me find this and bring it over, of how you might analyze your menu. And this is just a kind of a high level. There's a lot of detail here. I'm going to walk you through this. And this is an easy, simple example, but you don't want to carry this out. And tools like Margin Edge and AnxioChef will help you do this. But you want to run a spreadsheet on your entire menu over a certain period of time, over a week or a month. So for each item, you need to know how many were sold over that period, what's the menu price, and what's the food cost. And you have your food cost percentage per item, and you have your contribution margin per item. But the total sales is the quantity times the menu price. The total cost is the quantity times the food cost. And then you have your total contribution margin over that period, which is the total amount sold times the contribution margin. And then you analyze that as a percentage of the total contribution margin of your entire menu. And here's where you start to analyze what are your stars, the champions that you want to protect and promote. So item 1 and item 5 have the highest volume and they have a decent high contribution margin. Excuse me, I'm sorry. I'm trying to get through this with the end of this cold. So those become your green stars. Low volume, item number 3, with still a decent contribution margin, that becomes a puzzle, and you it's kind of an untapped opportunity. You need to figure out how to get more ordered and more people to buy that item. Item number 4, a low volume and a low contribution margin. That's one of the dogs. You either need to remove it from your menu or completely rework it somehow to increase the price, reduce the cost, or increase the number ordered. So you kind of get the idea. You want to analyze the entire menu, and here's where you can start to make adjustments to see how they impact this whole spreadsheet for a period or a month. If this dog were for instance sold for $16 and maybe you reduce the cost a little bit, I'm sorry, I pointed to the wrong item. It might become a puzzle where you want to figure out how to get more of it ordered on the menu. So you get the idea there. And so, what do you do with each of these items? We've talked about this a little bit already. On the stars, you want to feature it prominently, train your servers to recommend them, protect the recipe, and don't mess with what's working. On the puzzles, maybe it needs, again, this is a high contribution margin, but a low order rate, low value. Maybe it needs better placement on the menu or stronger descriptions. Maybe this needs to be recommended more often by your servers. Small changes can shift that puzzle over to a star. And then you have your workhorses, those with a high volume, but sort of a low contribution margin. And maybe the best thing to do here is subtle price adjustments, maybe a little bit of portion refinement, because your audience, your customers love this one. They keep reordering it. So you want to improve the margin on that particular one. But don't kill the popularity, just improve the profitability. And then your dogs, the poor dogs, either remove them from your menu or completely rework the recipe and the cost structure. Every day a dog stays on your menu, it's costing you money and attention. Okay. Let's move on to the next concept. And this, I'm not an expert in menu placement, or I'm not an expert in menu design, but I felt like I needed to touch on this. There's a basic concept here, and it's called the golden triangle. Where do your guests' eyes go first? They go to the top left, then they go to the top right, and then they go to the center. So it's kind of an upside down triangle on your menu. Um, Top right, top left, and then the center. So the stars, the high value puzzles, they need prime real estate on your menu. The stars should be up here on the top left, and maybe the puzzles are up on the top right somehow. And then your workhorses, they're in the middle of the list and they'll still sell because they're popular, but you want to rework those workhorses to get more profit out of them. And maybe you've got a workhorse down here in the lower right or the lower left, and it needs to be moved up a little bit to the upper right, left or upper right. That's my 2 cents on menu design. There's a lot more resources out there on menu design. Um, didn't mean to do that. Um, so that was just, I felt like it was something that needed to be presented here. Let's move on to portion control. So it isn't a fancy marketing theory. Portion control is taking even the best engineered menu that falls apart without consistent execution. Portion control is where the math meets the kitchen, and it's where margin either holds or walks out the door. We've done the work, you've costed every recipe item, you understood the contribution margin, you've analyzed your menu mix and made strategic decisions on what to promote and what to retire. But all that work gets undone if your kitchen isn't executing portions consistently. Let's do a little bit of math right here in the blue box. So a 10% over portion on a dish from your menu with a 30% food cost, and I know I'm going back to percentages here, that pushes that food cost up to 33%, that 10% over portion, a 3-point erosion on every single plate. Multiply that across 1,000 plates, and you're watching your margin walk out the kitchen door. So, how do we battle portion control? There's 3 tools: the physical tools, digital scales, portion scoops, pre-portioned containers. They make consistency possible, and they aren't optional extras. They're the equipment that makes consistency possible. Process tools, line checks before serving, price shift meetings that reinforce standards, plate waste tracking. Last week we talked about Waste Tracker that catches problems in real time. And then there's the people tools. Train on the why, not just the how. Explain to your team why portion matters. Give them a simple example like that, and maybe multiply it off over one of your stars, and give it true numbers. How many did you sell last month? And what if it was a 3-point erosion on the profit? What would that have meant to your bottom line? Give them a real example. Um, and when your team understands that an extra ounce of protein on every plate costs the kitchen $300 a week, or 1,200 bucks a month, maybe that hits the point and it changes their behavior. Successful execution requires both tools and culture. Your team needs to understand how portions impact the restaurant's financial health, not because you're being cheap, but because consistency is what separates restaurants that thrive from restaurants that struggle despite being busy. Okay, let's bring this together here. The four pillars of menu engineering: measure to manage. Precise recipe costing is non-negotiable. You can't engineer what you haven't measured. Contribution margin that we talked about tells the real story. It's the dollars going to your bottom line, not just the percentage on your P&L. It's where you need to focus when you're engineering the menu. When you're looking at financial statements, the cost percentages are fine and they need to be analyzed with the help of your accountant. But when you, the owner, are managing the menu, it's the contribution margin that matters. Menu mix analysis unlocks the hidden profitability. We talked about stars, puzzles, workhorses, and dogs. And once you see the menu through that spreadsheet lens, the strategic decisions become obvious. And you can see the impact when you make minor adjustments on recipe, on a plated item price or its cost. Control, it protects all the work you've done to engineer your menu. If you're not seeing a minimum of 65% gross profit from your food sales, or if your food cost is above 35%, there's almost certainly room to improve, and menu engineering is one of the most powerful ways to get there. Okay, I hope this is rung true in your restaurant. And menu engineering is profitable, but it only works as well as the data feeding it. Your recipe costs are outdated, if they are, or your chart of accounts doesn't separate food costs by category, or if your point of sale data isn't flowing into your accounting system, you're engineering from incomplete information. That's why we created the Restaurant Financial Systems Scorecard. It's a free 10-minute self-assessment that evaluates the systems underneath all this: your accounting setup, your cost tracking, your reporting infrastructure, your prime cost visibility. It shows you where your financial systems are strong and where there's gaps that might be costing you money without you even realizing it. I'll drop the link in the comments below this video. It takes about 10 minutes to walk away, and you'll walk away knowing exactly where your restaurant financial systems stand. So again, the link will be in the comments below. Next week, we're going to dive into labor as a profit driver. We're shifting to the other side of prime cost. I'm going to walk you through what ideal labor actually means, how to stop treating labor as a cost to minimize and start treating it as a profit driver to optimize. That's the mindset shift a lot of owners need, and we're going to dig into it next week. Thank you for joining us this morning. Have a great week, everybody, and we'll see you next week.